All right, guys and gals, back to work, Hope you guys had a fantastic weekend. Final week of the month of September. And boy, charts look fantastic tonight. I have a bunch of easy clues that are tipping us off to where the winning trades are waiting for tomorrow. In fact, I have two trades on my radar for tomorrow. Two pretty easy trades I'm watching for tomorrow. We're going to cover the entries, the exits. We'll cover the whole entire roadmap. That way you have a roadmap, a game plan to make some money tomorrow as well. So charts are all prepped up. Enough of the intro. Let's go make some money on Tuesday morning. Nasdaq triple Qs are already in front of me. The E-mini and the SPY is ready. I have three, I think, pretty simple clues on these charts tonight that are telling us where the winning trades are waiting for us tomorrow morning. One of those big clues is right here on these 60-minute, these hourly charts. It's quite easy to see right now. The buyers are in full control of momentum on the S&P and SPY, bullish overall on the Nasdaq and the triple Qs. The first clue of three clues on the charts tonight is this bullish overall direction we have on the hourly time frame. Now, I like to use these higher time frames as almost like a directional filter, if you will, but these aren't going to help us time the entries. I have two more, I think, more important clues on some faster time frames, some tick charts that will help us take this bullish overall direction. More importantly, though, time better entries. We'll talk about that here in a moment. Before we do that, though, let's talk schedule for tomorrow, because there are two big things on my radar for tomorrow and for this week. First things first, we have consumer confidence number at 10 o'clock Eastern time. That is pretty much the big news that we know of, at least tomorrow morning. Anytime I see Red Star news at 10 o'clock Eastern time, I'm always paying attention. That's something on my radar for tomorrow, and probably not a big deal tomorrow, but as we start getting into Wednesday, Thursday, Friday, we start ticking down the clock here, end of the third quarter, and that means scarcity. Markets do tend to get more volatile as we go closer to the end of the month, end of the week, end of the quarter here later on this week. So consumer confidence, and again, uptick in volatility into the end of the week, into the final day of trading for September, which is next Monday. But let's get back to our charts, though, because it's good to know when the news is, but the money is made on these charts, right? I mentioned earlier that I had three clues. One of those clues is this bullish overall direction we see right now on the hourly chart. But again, we're not going to use these higher time frames, these 60-minute charts, time the entry tomorrow. We need a faster time frame. This is where tick charts come in handy. This, by the way, is a 7,000 tick chart if you're watching for the first time tonight, and that yellow line right there, that is the only indicator I use every day. It's the 21 EMA. There are two very important clues on these tick charts right now. One big clue is this trading range right in the middle. Now, why are ranges so important? Well, first of all, ranges act like magnets, and the price likes to rotate back and forth from top to bottom of that trading range. We use things like expanding triangles as support and resistance. We use pendulum swings as support and resistance. That's a second and very big clue. The third clue we have here on both the S&P and Nasdaq is overhead right now. We have a lot of overhead resistance. So let's put all three of those clues together. We know we're bullish overall on the hourly time frame, a range acting like a magnet right in the middle, and a lot of overhead resistance up overhead. I have two really, I think, easy trades for tomorrow. One of those two trades is basically a bear trap down underneath that trading range. Now, bear traps come in lots of different shapes and sizes. My favorite bear trap entry is actually two different entries. One is called a failure. The other is called a trap pattern. So I would love to get down into some support levels. My favorite level would be down around that 33.5 level, somewhere down around this area. That's my favorite area. I would love to run this thing lower. Now, you know me, right? I'm not going to pick a bottom on this. I don't know how far that pullback will go. What I do know is we're at support with a range magnet above us. Overall bull market, this is a horrible place to be selling, right? You wouldn't want to sell down here. So if I can trap in some rookie bears, get those bears trying once, go higher, get those bears now trying twice. See, this we call the 2-try rule. Now think about this. If you're a seller and you're caught short right there, where are your stops? Your stops are right there. And what happens if you're caught short in a short trade? You get stopped out. You buy your way out of that trade. This is an easy way to trap in some bears. Again, bear trap, squeeze those stops. In our free video course, I call these a failure pattern. Bears try once, bears try twice to break out. They fail. We buy into those stops for that run going higher. Now, again, ranges love to rotate back and forth, right? So the amount that we go below that range, I'm going to use that as a target back up overhead. Now, that's only one of the 2 patterns that make up, in my eyes, a bear trap. As we start going higher, now I look for what I call separation off the moving average. Separation is very simple. I want to see a shallow pullback, a higher high in price. What that will do is that shallow pullback, that higher high in price, that sets up now for what is known as a technical bear trap or a technical trap pattern, like I teach in our free video series, right? So this is a great way to add to your winning trade, or a lot of times we'll take our 1-to-1 target and we'll jump back in on, again, this will be a trap pattern. So one of the 2 trades I'm watching for tomorrow, one is what I call a bear trap, right? It's buying off support below a trading range. And again, when I say bear trap, what I really mean on this is a failure pattern into that technical trap pattern. Again, could be 2 separate trades or adding to your winner. I always say if you want to make more money, add to your winners, and those trap add-ons are fantastic. We teach in our free video class. Now, the second trade I want to watch for tomorrow is because it's so bullish, is a breakout pullback, right? A breakout pullback. Now, breakout pullbacks have a lot of different ways to make money. The kind of the classical breakout pullback is I want to see, as we break out, I want to see some good separation off that moving average. Now, later on in this video, we'll talk about if I don't see separation, because that may lead to a good bull trap to short off the high. So I definitely have some bull traps, some shorts off the high. We'll talk about that a bit later on in the video. It's a little bit more advanced. So first things first though, if I can see a breakout going higher and I can get some good separation off of that moving average, that will tell me now I can now use that range now for basically for a breakout pullback. If there's one thing you need to learn about ranges, when you get a good breakout like this, don't chase after it. Wait for the breakout pullback. Now, when I think breakout pullback, I think 2-legged pullback. What's a 2-legged pullback? Well, it's just like the name sounds. It's 1 leg under the moving average, 2 legs. Now, when I think 2-legged pullback, I think about a measured move that goes a bit too far. I don't have a crystal ball for tomorrow, but the goal is get a 2-legged pullback, get around the top of that range somewhere. What was resistance becomes support. Now, this may wind up dumping all the way back and rotating back and forth like this, because that's what ranges do. And I will talk about how to make money on that. For now though, let's use that same 1-try, 2-try failure pattern into that, what was it again? That pop up, that separation off the moving average, higher high in price, and a trap below that low. What's really cool about breakout pullbacks is that the size of that breakout can be used as a measuring tool. So the size of that breakout leg there can be projected now going higher. That tells you now where to leave a profit target if you want to make more money, get better at adding to your winners and letting your winners ride. So 2 trades I'm watching for tomorrow. One is that bear trap below, that failure into trap combination. The second one, with enough pop going higher, we can use this as a breakout pullback. Think 2-legged pullback, a bit more than a measured move. And again, don't go picking bottoms on this. 2-try failure, run those stops. add to your position with that separation off the moving average and that technical bear trap. Now, again, I want to talk about a short off this high. I have a lot more trades I'm watching for tomorrow. Before we do that though, let's slow down for a second because I know most of you guys and gals watching right now, you know these patterns. You're making money with two-legged pullbacks, love failures, and trap patterns. But if you're watching for the first time right now, this might be a brand new language for you, a brand new strategy to learn. But don't you worry though, I teach all these entry patterns. I have hundreds of examples of failures and traps. I cover so much more of this in a lot more detail in our free video classes. I'll put a link up top here for you, upper right hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are waiting for us each day. More importantly, I'll teach you 4 my favorite entry patterns, help you time better entries and start making more money. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there, take that free course, learn the roadmap. It is perfect for anyone who is serious about making money in these markets. And also be aware too, I'm gonna put all the important links tonight, the description of the YouTube video. I'll put the free class links down there, start there first, learn the roadmap. And also too, don't forget, we trade together every day at 8 o'clock Eastern time. I'll put trade room membership information down there. I post a lot of updates on Twitter or X throughout the day, charts and videos and mindset stuff. If you're on Twitter X, give me a follow. Again, all the important links you'll need to learn more and start making more. It's all linked in the description of that YouTube video. But now you know my 2 favorite trades, the bear trap combination off of that low or the breakout pullback off of that high. Now, I am dying to talk about a short off the high right now. I have 2 I think pretty easy to make money with bull traps off that high. We're gonna cover that in just a few moments a bit later on the Nasdaq. First though, let's talk about some variations of this because I wanna get that move lower, trap in those bears and use that failure pattern to run back up. But we don't always get this kind of clean, nice, easy entry pattern. For example, a lot of times what happens is I get that failure and I can risk small to earn large like that, right? A good failure pattern will allow me to risk small and earn large. But sometimes when it bounces off that low, it bounces up hard, 1 try, 2 try, like this. Yeah, see now that same pattern, now the risk is there, the reward is right there. You have to be aware of kind of where the market wants to go. That way you can plan or filter based on risk reward. So if we get a real strong bounce off of that low, what I'll do is I now start looking for what are basically bear trap entries. I want to get below these lows, then get the entry going long here because then good strong signal candle, closing above the 21 EMA. Now my risk reward is like that. Does that make sense, right? So same pattern, right? Same pattern. If I run lower and bears once, bears twice, see, those are a good one, right? That one I can easily build a career on. I'm risking small and earning large. But the minute that thing bounces hard off that low, see now, no, right? That is not the pattern I want to be using in those scenarios. It's all about getting in underneath prior swings, higher high in price, underneath prior swings, because again, that will allow me now to risk small and earn large by comparison. If it bounces up hard, look for trap entries to give yourself a better risk reward. Another variation of that is oftentimes, for example, I love this 33 half level down here. We may wind up running lower, but there may be so many buyers down there, it may just boing and run right back up into that range. If that happens, if we see a V bottom off the low, look over here what happened, right? A V bottom, when it V bottoms off that low, look what they do. They draw a trend line off the highs, They bring it down around that low, and look what happens right below that low. This is a pattern that happens over and over and over again. Again, I want to run lower, trap them in and back up again, but if they just boing and run right back up again, I don't want to chase after it. The hardest part about a V bottom like this is that little voice in the back of your head is going to tell you, get in, you're missing it, you're missing it. Tell that voice to quiet down and follow this game plan instead. Mark a trend line off the highs, bring that trend line down around those lows. Again, like over here, right? Off the highs, off the low, and then look left, find a prior swing, find a prior swing. See this stuff? It's not rocket science, right? It's simply having a game plan to capitalize on it. It's that same idea. It's no wonder everybody piled on to buy that pullback. This is the same pattern right there. Now, if you're in my free video classes right now, I love traps in these scenarios, right? Traps are where I think the easiest money is made. And you'll learn a lot more about traps in that free video course I mentioned earlier. It could be a trap pattern. It could be a failure pattern, like we saw this morning, right? Failure into pullback combination. Get a lot of examples of these inside of our free video class. So again, if it V bottoms off that low, don't chase after it. Wait for that pullback, grab your bear trap, grab your failure pattern, your pullback combo, and remember, ranges love to rotate. So the amount below, the amount above, leave that runner because those ranges, they love to rotate off of that low. And one last variation, I promise, one last variation. We see a lot of these types of trades in our trade room. We oftentimes will get that rundown many times each month. We'll get a beautiful 1, 2, we'll trap the bears in. Nice, easy winner going higher. It's a 1-to-1 first target. We talk about that in the free video course. But oftentimes the underbelly of the range is an area of resistance. Again, ranges love to break out pullback. So every once in a while, we'll get our 1-to-1 first target. Stop moves up to point of entry. It's a winning trade, but the bears come in now and they whack that thing right back down to retest a low. Now remember, we're an overall bull market on the hourly time frame. We are now down at support with a range below us. This is a horrible spot to be selling. If you want to sell high, sell above a range. You want to sell high, sell above a range. Do not be trying to short below a bull range like this, an overall bull market. The odds are stacked against you. And remember, I'm not going to pick a bottom on this. For all I know, it'll keep going a little bit further. I'm not going to pick a bottom on this. What I do know, though, is that once this thing's pulled back, these are rookies down here. These are rookie sellers chipping away at that, trying to push this thing going lower. No, right? This is not the place I want to be selling, but I'm glad that rookies keep on selling these lows. We're going to use those stops, run those stops, and squeeze those bears out. And again, this is the same thing over and over again. It's a 2-try failure. And then, like I mentioned earlier, it's that separation off the moving average, higher high in price. That gives a chance now to add to our winners or jump back in with that bear trap combination. All right, guys? So again, a double bottom retest is oftentimes a gift to us traders because anybody who sells short right here, they're taking their profit where? At that low. Sellers up here become buyers down here, right? Makes sense? I don't want to sell, then I'm going to buy nice and low. Trap them in, squeeze those stops, and use that range combined with that overall bullishness in the 60-minute time frame. Use that to stack the odds in your favor. Boy, I'm getting excited just talking about these bear traps right now. Hopefully we get one of those variations for tomorrow. Now, let's talk Nasdaq, right? Because I mentioned earlier that breakout pullback, but I want to talk about 2 ways to short this thing off the high, because again, there's a range down there, and again, we got a lot of resistance up overhead. Let's talk Nasdaq now. Before we dive in though, let's slow down for a second, because if you're enjoying this video, it would mean the world to me if you hit the like button for me, make sure you subscribe, and I'm sure you get a buddy or two that would love to learn this technique as well. If you share with a friend, that will go a long way to help me kind of grow this YouTube channel. Every time you hit that like button, subscribe, and share this video, YouTube rewards me by helping me grow this YouTube channel. So I know we're all busy people. I appreciate everyone carving some time out and watching these videos. Thank you so much for liking, subscribing, and sharing, and thank you so much for all your support. Now, enough of the begging for likes. Let's talk Nasdaq. Nasdaq, you'll notice, is bullish overall, but look what's on the Nasdaq right now. We haven't actually taken out that big all-time high. That is a big, big level of resistance up overhead. Let's grab some tick charts. Again, tick charts are much easier to time, better entries, because they're based on volume. One tick is one transaction. This, as always, is a 4,000 tick chart, upper left-hand corner. You can obviously see we are bullish here into a trading range with a bunch of resistance up overhead. Ranges act like magnets. Ranges love to rotate back and forth. I talked earlier about a series of bear trap patterns I'm watching at the low. We talked about the typical failure trap pattern combination and some variations I'm watching for tomorrow. And just for the record, by the way, the level I would love tomorrow is that low right there, 19,860. There are a number of reasons why I like that low for tomorrow. We'll talk more about that tomorrow morning in our trade room. I also mentioned earlier how if we see enough strength going higher, we can buy a breakout pullback, right? What the key though is if we see enough strength going higher. Those all-time highs up there, they are pretty intimidating. So how would I short this thing? How would I short this thing off the high? Well, what's the problem? The problem is I'm going against the market's momentum, right? See, if I buy off the low, I'm buying along with the overall momentum in the market. I can make a lot more money doing that, be more aggressive doing it also. Off the high though, how do I sell off the high? I can't pick a top on this, right? Because we're overall bullish and the all-time high is right there dragging us higher. There are two types of bull traps I'm gonna look for as we go higher. One is a very simple classical or classic technical bull trap. It's very simple. It's buyers trying once to buy. It's lower low. It's buyers trying twice to buy. Now, this is a horrible spot to be buying unless we see that pop up, that separation off that moving average we mentioned earlier on in this video. But if we run higher, take out some of these highs, and we start seeing buyers trying once, trying twice, we're not getting separation away from 21 EMA. It's a lower low in price. It's a bull trap off the high, and we see the strong red candle closing back below that 21 EMA. That, my friends, I call that a crown reversal pattern. It is basically a bull trap to sell short off of that high. Now, at the same time, you could easily stack these together because the amount that we go above the range can now project now below the range. This is now where, because again, ranges like to rotate back and forth. We know where the market's going now. Now, as it drops, look for that same, what was it again? Separation off the moving average, lower low in price, and trap above that high. These are the same exact pattern. These are both technical bull traps. One I call a crown reversal. These are a bit more difficult to learn because they are really truly a reversal. The one below it though is more of a continuation pattern, right? We've already got the move going lower. These are oftentimes the easier ones to make money with in overall bull market. So basically it's a bull trap into a bull trap. One is reversal pattern, crown reversal. The other, of course, is simply a bull trap combination. Now, in the same idea of that, the second bull trap pattern, which also applies, by the way, to the S&P, is a Vtop. Oftentimes, we go up and we just come crashing right back down. Now, we didn't get that pattern today, but if I can get that pop up and come crashing back down again, think about that grinding move going lower, right? So, I would love to go up, trap the buyers in, and sell nice and high up there, right? But again, sometimes we don't get it. If it V-tops off the highs and slams back down again, watch that grinding motion. Because again, anytime markets grind, draw a trend line, find that channel, look left, find that prior swing. This is not that difficult to learn, right? Too bad this one happened over lunch this afternoon. But as we go lower here, mark that trend line off that low, bring it up around that high, and then look left, right? Find some prior swings. And what I want to get the first test is the best test. First test off the high of that channel, we pop up. We don't get a good short signal up top. It grinds back down. We draw that trend line tight off that low. We find that channel off that high. And again, first test, it could be a bull trap. Like we're showing you here, buyer failure pattern above the moving average, a pullback combination. And again, whatever you do in a range market, don't be cutting those winners too early. You know how ranges work, the amount above, the amount below. Leave that runner. And then once we get to the side of that trading range, what do? You trap the bears in, right? Once we find our way back lower again now, we run lower. This is the last place you want to be selling. Take your profit down there. Taking profit. Trap those bears in. 1 and 2. And whoop, right back up into that range. Once again, trade that rotation back and forth as we go. All right, guys, that's the game plan for tomorrow morning. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. I'm going to put all the important links you'll need in the description of the YouTube video. Start first on the free video classes. Upgrade to join the trade room as an advanced member. And as always, any questions, any error message getting started, you can always use live chat or simply pick up the phone and call us here in the office. We're always here answering calls, answering questions every step of the process. All right, guys? Boy, it's been a fantastic day today. Hopefully it's a great day tomorrow morning. End of the month, end of the quarter, volatility picking up, and another game plan's all ready for tomorrow. Hope you learned a bunch tonight. Hope you use this knowledge to earn a bunch tomorrow, and hopefully I'll see you trading with us sometime soon in the morning trade room, 8 o'clock Eastern time. As a brand new member, as always, my name is Joseph. Be well out there. Be nice to each other out there, will ya? And be here next time. Adios, amigos. Bye for now.